Hi friends, Simit here from InformedTrades.com. Today is Thursday, August 21st, 2014. Time for our daily Forex chart review. Basically, in these sections each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes. These are live trades I'm placing on a real trading account. The trades are verified by myfxbook.com, and my entire trading history is posted on my blog on InformedTrades.com. If any information I'm presenting to you is unfamiliar to you, you have any questions, want to learn more about other styles of trading, other markets, check out informedtrades.com. We have a huge archive of learning material, all designed to help traders learn. Okay, let's get started with a look at the charts. Right now we see gold, big down day in gold. Okay, we are now nearing support. So we have support, 1280 was a major support level. We did sort of break right through that. It'll be interesting to see how price action uh, how price action develops over the next couple days. I do think what I would like to see is, the market sort of stop around 1270, 1280-ish, stall a little bit, see a little bit of a trading range. That could be identified as an accumulation pattern, or it could be interpreted as an accumulation pattern. Bottom of a range, narrow candlesticks, and then that might pave the way back up for a move to the top of a range at 1330. So we'll see. It also is worth noting that, or probably 1310 is solidifying also as a resistance level. So even if the market does bounce off 1270, I think 1310 is going to be a more interesting resistance level. We saw it established here. In fact, let me add this line to the chart right around there. Make it a little thinner. Oh, what's going on there? That little, let's make it dark. Let's make it. There we go. Okay, so price getting to that level, and let's just for good measure, let's make it. There we go. Okay. So that's going to be an interesting level too, 1309, 1310, right around there. We saw that established as a resistance level back in May. We have the 200 exponential moving average there. And what I found really interesting is that we had this reversal candlestick pattern. We had a range form here from, what is this? Oh, this is getting away. From August 6th until, let's say, August 13th. So that week, we saw the market in a range right around 1310 after it rallied to that level. So we saw clear, and then the market fell. So this was clearly a distribution pattern. Market fell. So if we go back up to, if we rally from support at 1270 and we run to 1310, we may find some resistance there, and that could be for the short-term range-bound traders. 1270 to 1310 might be an interesting range to play. Another way of looking at it is maybe taking partially off, half off at 1310, and hold out a little more for 1330. There's some various strategies there. It all depends on your approach to risk management and sort of the strategies you like. Anyway, that's gold. I am still, as I've mentioned, accumulating. I'm surprised that we fell this far down. I sort of thought that the lows what were the lows in July? I did not expect we are seeing new lows. I did not expect the July to see new lows in August. I thought the lows we saw in July right here would sort of be the bottom. That is clearly not true. However, I still think it's a good time to accumulate, and we saw that from the monthly chart, right? So just to put things in perspective, this low looks like it's going to hold, and I think this low is going to be the low, 1180. So if I think 1180 is going to be the low, and we're looking at this broad pullback, seeing it as a pullback in an uptrend, I think we're on our way to 2300. We sort of talked about that a bit yesterday. I'll talk about that a bit more in a separate video. Okay, so that's sort of gold. Bitcoin. Now this is interesting because we are seeing some rallying in Bitcoin, right? So the market is finding support right around, let's call it 470. And that was a breakout level that was established going back here. We had the market in a range for a long time. Finally, the breakout occurred on May 20th, where it really shot above 470. So the market is seeing this as a support level. We are now quickly at a resistance level 522. That was established here April 15th. Here again, you could argue May 24th. We had the market stalled a bit there. However, I don't think this is a hugely significant resistance level. I'm more interested to see if price can make it back up to 589. I think that would be a great level to short at. The trend is now clearly bearish, in my opinion. With that said, I am long Bitcoin, and I'm long actually right around here. This is basically the level I entered at. I'm entered at 530, or actually between, it's like 528 when you factor in the commission and everything. So basically, it's slightly below break-even for me, but I'm holding this for the long term. Using it like in case Bitcoin actually ends up being a dominant currency or a dominant tool in the global payment network, or there's a whole technology side of it. And if that plays out, it could result in a ongoing appreciation in Bitcoin. So I'm sort of holding out, small position holding out to see if that occurs. For the active traders, shorting at 590 I think could be interesting. Okay, now on to the currency trades. Euro Kiwi. This is so far so good. Another inverted hammer at resistance here near where I entered. This is an encouraging sign. Price is below where I entered, so slightly in the money now. The most important thing though is the reversal candlestick at where I entered. So I think this spike here, the really nice spike on August 20th yesterday, all of that suggests to me that bears are still defending 58.23, and that it is a legitimate short trade as a result. Okay, that is Euro Kiwi. Now next up, Kiwi Yen. This is very nice, very comfortable. Hopefully I get to de-risk this trade soon. Let's see, price touched 87.26 today, but let's see if it closed at or above that level. If so, then I will move my stop from 85.45 to my entry point of 86.30, and the trade will be de-risked. As I mentioned before, my criteria for de-risking a trade is based on where I entered, to where my target profit is. It needs to clear a support or resistance level. So we have a resistance level here, right? It was established on May 28th. Basically, the first level I'll look for, you can see something's going on here too in late July, early August. If price can sort of clear that resistance level, then I'll feel comfortable knowing that price will have to go back down through it, break it on the downside to get to my stop. So if that can happen, then I will de-risk the trade, and that's always nice. That's always a milestone, at least. Then I know I won't lose any money, which is, of course, comfortable. Risk minimization, finding as close as you can get to free money, I think that's sort of the way I look at trading, the great opportunity. Okay, that's Kiwi Yen. Next up, Canada Swiss. Okay, now this has been, I'm seeing signs of Canadian dollar strength, which is a little disturbing and not really what I wanted to see for this trade, because I'm short Canada Swiss here, so I'm short the Canadian dollar, long the Swiss franc, or short the Canadian dollar versus the Swiss franc. Speculating the exchange rate, the Canada Swiss exchange rate will go down. Now, as I mentioned before, we do have the 50 simple and 200 exponential moving average right here. We also have 50% Fibonacci retracement level right there. So that's some pretty strong resistance between where price currently is and where my stop is at 83.58. However, price is above where I entered. It's a little bit of a floating loss at the time, and we're starting to see a pattern of higher lows. You could almost draw a trend line starting from August 8th up. So that's not the most encouraging sign, and I'm a little concerned by the strength of the price here. I did actually think about closing the trade out. However, with that said, the high of August 7th was not breached, so you might regard that as a bearish checkmate that's still in place. I thought, we still have the 50 simple and 200 exponential moving average here. I thought it might be a little premature to close, and there may still be an opportunity for price to go back down. Here's a 4-hour chart. You can see we sort of reached a new high here. Price is now down a little bit, but we weren't able to breach this high here. So in light of that, I thought, we're still below the 50 simple and 200 exponential on the daily chart. We haven't breached this high from August 7th. Let's give it a shot. Let's not be too rash in our actions. In general, I like to, as close as I can get, to just stop, put on the order, put on the stop, put in the target profit. The one other variable I'll factor in is de-risking the trade after it moves in my favor, but that's about it. I like to be as hands-off other than that as I can. So I don't want to tamper. I thought about closing this prematurely, but I thought, you know what, the case isn't that strong yet, so let me just hold on. That's Canada Swiss. I did put on one new order today, dollar Singapore, shorting this pair. Now, this is something I mentioned before where you have a really strong down day today. So we may, and I set to short at 25.23, which is the high of the candle today. Now, I'm not sure if we're going to get a pullback. Often when you see something like this, you don't get a full pullback, especially because the way I placed the order, I'm really requiring it to go all the way back up to its high today. Maybe it would go to, 25 right around here. I'm not sure if it's going to go up there. So then you may ask, well, why did you put that order there? Why not put on a market order or, short, put an entry order here at 25.08? I really like to, as much as I can, put the order at a resistance level. So, you see there was some resistance level here. We have a tweezer railroad pattern June 17th, June 18th at this same level. We have some long wicks here throughout mid-May. So I saw the rationale, and we suddenly saw the price, today's high reach that. I really thought this was the lowest level I could put it at. In fact, part of me wanted to put the entry order here because I think that's even clearer at 25.31. But I didn't do that because I wanted to make sure that I at least got the high end, so 25.23, then we're at least touching today's high. I thought, all right, that's an acceptable, and the 200 exponential moving average is there, so maybe they'll come back up and touch that. But chances are this order won't get filled. I thought it's worth a shot. Really nice setup, targeting the recent low at 23.63. So what's that? That is 140 pips, 160 pips, excuse me. So looking for a gain of 160 pips, risking 35 pips, 25.58. Basically, the idea here is that this high here from August 8th is a bearish checkmate. The price is not going to be able to get past that. If price does get past that, I've been proven wrong. I'll get stopped out, and I'll have to take a small hit there. So I'm risking 35 pips to gain 160. That is close to 5 to 1, a little less than that, over 4.5, whatever 160 divided by 35 is. But I thought it was a nice setup, clearly in a downtrend here. Prices pulled back within that 200 exponential moving average. Let's see if it goes back one more time to 25.23. If so, I'll get filled. If not, if the market just continues down from here, well, then I guess the trade is going without me. And that is sort of about it for my trading for today. Just that one new order on dollar Singapore place, and of course we still have short Euro Kiwi, long Canada Kiwi Yen, and short Canada Swiss. 3 trades that have been on for a while. None of them have been de-risked. Might get a chance to de-risk Kiwi Yen today. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.